Bloomberg Audio Studios. Podcasts, radio, news.
Government and business leaders from around the world met in Qatar this week, and African economies wanted to make sure they were on the agenda.
African capitalism, enabling the private sector to drive, orchestrate, and lead the growth and transformation of the continent. I believe that these are things we need to do to take Africa to the next steps.
With world trade rebalancing after the inauguration of President Trump in the U.S., African leaders are looking to the Middle East for a new source of investment.
African institutions are building capacity, but we need to also partner with the rest of the world to have robust payment capacity to help transactions as well as facilitate trade.
On today's podcast, we're bringing you the best of the Qatar Economic Forum in Doha. From long-term investments to emerging markets, is the hope for Africa's continuing growth coming from the Middle East? I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. On today's special episode, we're bringing you some of the key moments from the Qatar Economic Forum, where I was speaking to a number of Africa's foremost voices from the world of business, economics, and politics. We start in Nigeria, where volatility in the oil market has meant lower earnings for Africa's biggest oil producer. I spoke to Aminu Umar Sadiq, the managing director of Nigeria's Sovereign Investment Authority, to find out where he sees future investment coming from.
As the oil price goes up and down, that actually affects the amount of inflows that come into NSIA that actually give us the recourse to invest.
So then what does that mean for the outlook moving forward for NSIA? Do you focus on other assets potentially? Do you look to gold? Do you look to, where else are you focusing then?
So on the Future Generations Fund side, at the end of last year, actually, clearly valuation levels were high, and so we pivoted to cash. And that allowed us to do a couple of things at the beginning of this year. The first thing was we decided to pivot away from alternatives into defensive assets, particularly growth assets, as well as investment-grade corporate bonds. The second thing that we did was actually for our long-only portfolio, our long-only developed markets portfolio, we also decided to pivot away from the U.S. to Japan, to Australia, and to Europe. And then finally, what we decided to do was to rationalize our assets allocation to see how we could consolidate the number of names that we had into fewer, higher quality stocks.
Did the pivot away from the U.S. happen prior to this new administration coming in? What was the thinking behind that?
Just the diversification play. It was important, given where we saw the market, how buoyant the market was, that we began to look elsewhere, just to ensure that we had a more robust portfolio. We had no political considerations, so to speak. And then on the infrastructure side, I think we're looking at a number of large-scale transactions. I think the first thing that we're doing was around healthcare, particularly around oncology. You may have heard the NSIA co-founded a company called MedServ, that focuses on oncology, on diagnostics, and on cath labs, and we are expanding that significantly. The second thing that we're doing is off the back of Mission 300, the proposition that both the World Bank and the AFDB co-founded, the NSIA Africa 50 Sustainable Energy for All are also putting together a $500 million distributed renewable energy platform.
You were just talking about how a number of African sovereign wealth funds are going to be coming together in just a few weeks in Abuja, you were mentioning. Is there a focus then on potentially local debt markets as opposed to looking international? Do you think African sovereign wealth funds are positioned to find that capital on the continent?
I think that's an excellent question. I think when you look at the size of our local pension funds relative to our infrastructure deficits, that is the kind of capital that we need to be looking to mobilize towards infrastructure financing. And I think we can do more as multilaterals within the continent, as sovereign wealth funds within the continent, to begin to find ways to actually enhance bankable propositions and find ways to give comfort to conservative capital, particularly the pension funds, to actually finance our infrastructure projects. On the 16th, alongside other African sovereign wealth funds, we'll be hosting the Africa Sovereign Investment Forum in Abuja, and that will be the main theme of discussions at that point.
What's your target then for the end of the year?
In terms of
financing and mobilizing capital,
we're looking at a minimum of $1.5 to $2 billion as a start. And we are hopeful that a combination of all 15 of us will get there.
But Africa is not only looking to export oil. It also wants to market the skills and talent of young Africans to the rest of the world. Here's Hendrik du Toit, founder and CEO of Asset Manager 91, on the role AI is playing on growing emerging markets in Africa.
I'm very excited about the solution of real-world problems, i.e. getting research time, which wouldn't have been justified in labs on the west coast or east coast of the US because the problem was deemed too small or the economic outcome wasn't good enough. So real farmers, enabling weak states to operate really well. I mean, you could digitize and technology enable the weakest developing country states into something really special without turning them into the surveillance state. I think the downside is, and I think where I'm quite bullish about Africa in particular in emerging markets, because Africans aren't spoiled. So all these reasonably unproductive, very expensive white-collar jobs in the West, we are going to lose lots and lots of them, and everyone can't become a yoga instructor, right? Africans are kind of not in that food chain and therefore will adjust in a way which is faster and better. But I worry about the general migration from manufacturing jobs and, to which may be supplanted by robots in the developed world, to the services jobs that would have been exported to the developing world, a sort of India Bangalore story. That may not happen again. Think about how many software developers Microsoft fired, but think of the people behind those software developers. For each one of them, there's probably 10 of them in India, other places which do it. And I don't know the answer. So there's an up and a downside. But I think Africa, because it's used to being tough, and Africans are very flexible, can probably deal with it better than any other part of the world.
And stick with us. When we come back, we'll hear from some of the African startups to watch in 2025 and take a look to the future at how a changing climate could mean changing investments. We'll be right back. Welcome back. Today, we are coming to you from the Qatar Economic Forum in Doha, where business and political leaders from Africa have come to make the case for investment. African startups were here in Doha to find support from global investors, and we're showcasing some of the best of the continent with Bloomberg's inaugural 25 African startups to watch list in 2025. I spoke to Owusu Akoto, the founder of Ghanaian logistics company FreezeLink, and also Chilufia Mutale, founder of the Zambian fintech firm Ishanti. I started by asking them about the opportunities and challenges for startups on the continent, and also difficulties with some of the gaps in funding.
We have a lot of foreign influence in our ecosystems. Even the private equity companies, the local private equity companies, generally you see that they're DFI funded, so development finance institution funded. So with the USA drawing back, with I think probably some inertia when it comes to the Development Finance Corporation in the US, even the Brits are drawing back. It's definitely had some ripple effects in terms of funding. But at the same time, our pension funds sit on so much capital. And so what we're seeing in Ghana is more momentum from the pension funds, more focus on alternative assets, which have the ripple effect on deploying capital that ends up in some of our local startups.
Has that been your experience, Chilufia?
Yes, well, it's well known that less than 2% of funding goes to women-led businesses. Ishandi is a women-led enterprise, and globally, less than 2% of funding goes to women-led startups. So you can imagine just in Africa alone, what percentage is that? And funding has been a challenge for us. We raised back in 2020, and over 4 years, we're still trying to raise another funding round, and it's a bit of a challenge. And that's why we have to innovate, build a lot of resilience, stay lean, embrace technology, so that we can then evolve around other strategies to basically scale our businesses. And that's the ranking of number 4 on Africa's fastest growing companies really is a testament to our resilience that we've built amidst the challenges that we have around funding.
How do you scale? You're talking about scale within other markets, within communities. How do you do that without that access
access to funding? What are some of the innovative ways you're maybe finding that you can get there?
So we have strategic partnerships that we struck with mobile network operators that have customer base of over 10, 15, 20 million customers. Through these strategic partnerships, we're able to leverage off the customer base they have, their access to marketing and their direct access to cost of acquisition. So it's much lower because they already have that existing base. It costs much less for us to reach out to these customers through these partnerships. So revenue sharing models are the new way to go through collaboration. Without raising any funds, collaborating with banks who are not able to reach the underserved, where we provide the technology, we reach out to the customers, and the banks then provide the funding, and you have revenue sharing models.
And you're seeing the willingness by some of these institutions, yeah?
Yes, they are willing. They may not have the technology and the capabilities to serve the underserved, but they have the capital. And then we have the tech, we have the market access, we have the strategic partners. And then we also have peer-to-peer lending platforms that really help us work with the communities who believe in our mission, who then provide the investments as low as even $1, and then that then is then on lent to borrowers on the platform. So we're connecting investors to borrowers on the platform, and we've raised over $6 million just through peer-to-peer lending and issued over $11 million in loans for over the last 3 years.
How do you balance, Akoto, the need for some of the solutions that you both are speaking to on the ground? You know locally what the need is there, but also you talk about the investors and the others, how you have to appeal to. How do you balance that?
So Africa is not Silicon Valley. And I think that oftentimes our startups do have a spray and pray approach when it comes to funding. We've been guilty of that in the past. But what we found is that it's better to try and find those pots of patient capital who really understand the context. And so we are working, for example, with an asset finance company. They already have an asset finance fund in East Africa, and we're looking to work with them to deploy modular cold storage for our farmers so that they can pay on a pay-as-you-go basis. So really it's a balance of identifying what the need is and connecting with those who really understand the local context.
And finally, let's take a look to the future. With the impacts of climate change becoming clearer on economies across the world, and especially in Africa, sustainability is going to become a key part of investment decision-making in the years to come. I spoke to Martha Osier from the Africa-focused investment firm Adenia about what this means for Africa's economies and what opportunities it could create.
In Kenya, we have established today what is the largest, second largest retailer. When we invested, they had 9 stores. Today, we have 61 stores. And we have partnered with another green mobility company called Rome Electric. And one, they do the delivery. But I think more important for the startup is we provide them infrastructure where they can build their charging stations. So in terms of financing, it's not necessarily that, oh, you have to do another capital raise. Can you find people in the ecosystem who you can leverage and reduce your capex costs? Because I'm sure to set up or to go to, I don't know how many landlords or property owners and say, I want to establish charging stations. Yet if you have a supermarket with 61 physical brick and mortar locations, that's an easy way for you to plug into the system. So we're not directly funding startups, but I think for startups that have applications to our existing businesses, that's an indirect way of financing and supporting them to grow.
Martha, what is going to be key for momentum in innovation to continue to build over the next few years?
I think it's, as been said by all the panelists, it's solving real problems. Yeah. If I just relate to what Ayula was talking about, in our supermarket, at least 15% of our products are fresh that we are sourcing from 20,000 farmers. Yeah? If we could provide them a way to store those products, what happens in Kenya is the fresh products are transported overnight because it's cooler. And we know, at least in Kenya, over 50% of farm losses are happening because of a lack of that cold chain, okay? So partnering with the supermarket, providing cool boxes to these farmers, one, I think solves your financing challenge, but two, you're solving a real problem for a customer who ultimately could either be, your exit plan or your exit plan to, to other supermarkets. So I think what is key for startups is make sure you're solving a real problem for people who are in your ecosystem. Don't only look at private equity, but also look at corporates, especially corporates that have been sponsored by private equity, as potential ways for you to grow your business and ensure your sustainability.
Of course, many economies are looking for new investment opportunities like those at the Qatar Economic Forum after the U.S., under President Trump, signaled it would be stepping back its role in the global economy. With South Africa, one of the economies hit quite hard by the U.S. pulling back from aid spending and imposing tariffs, President Cyril Ramaphosa has been in Washington for talks with President Trump. The South African president found himself, though, ambushed by President Trump in the Oval Office.
If there was Afrikaner farmer genocide, I can bet you these three gentlemen would not be here.
Each one of those white things you see is a cross, and there's approximately 1,000 of them. They're all white farmers, the family of white farmers.
There is criminality in our country. People who do get killed, unfortunately, through criminal activity are not only white people. Majority of them are black people. And we have now
the farmers are black. The farmers are not black. I don't say that's good or bad, but the farmers are not black.
Next week, we'll bring you the full analysis of the fallout of those talks and what the future looks like for U.S.-South African relations. And you can see all of our coverage from the Qatar Economic Forum on Bloomberg platforms now, including the Next Africa newsletter. We'll put a link to that in the show notes. This program was produced by Adrian Bradley and Tiwa Adebayo. Don't forget to follow and review the show wherever you usually get your podcasts.